Sajjid Chinoy, India economist at JP Morgan, is joining in right now. The winter session of Parliament kicks off. Sajjid, good morning. Great to have you with us here. Prashant this side. Many are saying, and I think you're also saying, I've got your note here, that the winter session of Parliament would be fruitful. The FM's drive to do reform is very much alive, and the government and the opposition have reached an implicit understanding to get things done. Is that the way to look at this? What's your sense?
No, Prashant, that's not the note we had written. I guess our concern is that there are a lot of thorny issues that awaits the government. It's a crucial session, I think, because it's going to provide an insight as to how constructive our politics are. If you think about the bulk of what has to happen over the next year, these are legislative reforms, whether it's pension, insurance, banking, at some point next year, land acquisition, the GST, all of these require parliamentary approval. And so if you have another washout in the winter session, there will be serious concerns about whether our political parties can reach bipartisan agreement on any piece of economic legislation. So I think from that standpoint, this session is very crucial. I think there are very real questions whether there will be business conducted over the next month, and I think this will have a crucial bearing on markets, on the currency going forward.
What do you think will be the government strategy when the session kicks off? Because and then that will determine the reaction of the marketplace to any potential outcome. Bills being cleared or they being rejected. Do you think the FM will go out, present everything he's got, essentially put everything down on the table, up for debate, up for clearance? Is that the way it will happen?
I think even before one gets there, what one has to avoid is a long, protracted debate on the past. So if we get stuck in the first week in a big debate on FDI and multi-band retail and whether Parliament should vote on it or not vote on it, that would be, I think, a very thorny situation, one that the government would like to avoid. So I think we first have to ensure that we don't relitigate the past, that the government is not under any pressure to revoke any decisions made in September and October. I think once you cross that minimum hurdle, there are many pieces of legislation, I think, where there will be bipartisan support. If you look at the banking bill, for example, or the Forward Contracts Act. So I think if that's the focus where both parties try and find common ground on non-controversial legislation, I think that could sow the seeds for some goodwill where you could reach compromise. I think the government will have to be ready to compromise on many of these bills, at least to create the notion that the politics is getting constructive. But Prashant, I'll make one other point. I think while all the focus is going to be on Parliament over the next 4 weeks, I think the real action in terms of the economy is outside Parliament. If you think of what's really important to jumpstart investment, growth, fiscal consolidation over the next 6 months, these are not legislative bills. It's going to be whether in fact we do have a National Investment Board, and I think that's clearly outside the ambit of Parliament. If that happens, I think that will do much more to investment in the near term than any of the parliamentary procedures. We should look at those two subcommittees that have been set up for the GST, and they're going to come back on December 31st. If they can reach common ground and the likelihood that GST will be implemented in 2013 happens, that's going to be critical. We'll have to focus on the disinvestment program to see how close to the fiscal deficit we stay. So I think a lot of the near-term economic action will be outside of Parliament, even though a lot of heat and light will be focused on what happens inside Parliament.
Got that. Sajjid, you raised two specific things in your note. One, you say the issue of no conference motion. TMC's Mamata Banerjee insisting on it, but unlikely to find many takers at this stage. And the other is FDI and multi-brand retail, which the BJP yesterday said is a vote on that is a precondition to the functioning of this session of Parliament. How do you think about both?
I think those are the tricky first steps that the government will have to navigate through. As I mentioned, I think there are indications now that perhaps a vote of no confidence is less likely to be introduced or debated on. The bigger worry is that if you find the FDI issue taking up the bulk of the first week and there's no agreement on that and parties insist on a vote, the government's in a very difficult position. It's not going to withdraw that executive action. We've already withdrawn it once before in November of 2011. So I'm sure the government's going to stick firm. And if that becomes the basis for a lot of disorder in Parliament, I think that will be a pity. So I think hopefully we'll be able to get through that. And I mean, I think you have to realize that the economy is in a difficult situation, yet. We've had 2 good months of macroeconomic reforms or reformist moves, but the fact of the matter is growth is still tracking well below 6%. CPI inflation is close to 10%. There are serious questions whether this year's fiscal deficit target will be met. The current account deficit is close to 4%. So I think really political parties and the politics will have to become constructive to be able to address these very difficult macroeconomic challenges.
So, you said the real stuff which will impact the economy is outside the Parliament. By that measure, should we say that even if it's not a washout, things are debated, not cleared, etc., and that multi-brand retail proposal, more symbolic than anything else, is not withdrawn, government sticks to it. By the end of the session, 1 month later, we find not much has been done. Now, it's not a washout, but not much has been done. Well, how do you think financial markets will read it? Would they say it's a successful session? The government did try, at least. I mean, and we had debates and not a complete washout.
Yeah, I think that will be a positive first start. I mean, if you look at the recent history, the monsoon session was a complete washout. So at least if Parliament is allowed to function, if there are reasonable debates, if there's the back and forth, that will be a reasonable first step to try and reach consensus. I think we have to recognize that all of the bills in this session are important, but not really game-changing. I think what financial markets will look at is evidence of whether parties can come together for the bigger stuff. And by that I mean the land acquisition bill sometime in 2013, and of course the goods and services tax. So if there is a sense that parties can work together, compromise can be reached, and if the probability of land acquisition and the GST happening in 2013 increase, then even if not much is passed in this session, it will be okay, because I come back to those as being the key drivers of macro outcomes next year.
Okay, got that. But they are not being introduced in this session, right? Land acquisition, etc. Not in this session.
Right.
So,
that's right.
Yeah.
No, it's not. There are the two important bills that have not been introduced: the land acquisition bill, as well as the Food Security Act. And I think those are notable omissions.
Got that. Let's just talk about the fisc for a bit. The fiscal deficit. The FM is very aggressively saying, well, we'll be able to do 5.3. The auction proceeds are not that big. I mean, they've a bit of a washout there. Maybe for future auction sales, prices will be brought down. Yesterday, LIC's ability to invest in companies has been raised to 30%. Many are reading that as, getting LIC ready to buy a lot of PSU stock when disinvestments happen. And there's the other way of reaching that target. Getting more dividend from PSU companies and things like that. I mean, how would you read that as an economist, Sajjid? I mean, these kind of things to be able to get to that 5.3%. I mean, it's still good for you, or not really?
No, I think from the standpoint of withdrawal of fiscal stimulus, which is what we really care about. I mean, why does the fiscal deficit matter? Because large fiscal deficits have kept aggregate demand high, have kept inflationary pressure sticky, and as a result not allowed the Reserve Bank to cut interest rates. So if you judge it purely from an economic standpoint, an asset sale is not a withdrawal of fiscal stimulus from the economy like a cut in spending is, like a tax or a duty is. An asset sale is simply an exchange of assets between the public and private sector. It is not contractionary in nature. And therefore, whenever we look at how much fiscal deficit is withdrawn, we place asset sales below the line as a financing item, not above the line. And this is very standard practice around the world. The IMF, for example, computes it. So there are two issues here. Will the 5.3% target be met? I think even if you reach your target on non-tax revenues, you have another 2G auction, you set a lower reserve price so that the auction results in a price discovery. Even if those targets are met, I mean, there are still questions. Tax revenues are running well below targets. You still have significant subsidy overruns. So even if you get the non-tax revenues, there are serious questions about how to get to 5.3. And if you don't get the non-tax revenues to the full extent, then that makes the situation even more difficult. But purely from the standpoint of withdrawing fiscal stimulus, I would take away non-tax revenues and only focus on what your slippage is in terms of tax collections and what your overruns are in terms of subsidies.
Got that, Sajjid. Thanks very much for your time. Great to have you with us here on this show, as always. Appreciate it very much. Sajjid Chinoy, JP Morgan, with his thoughts there.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for Retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.